Yeah, so South Dakota has, a lot of competitive advantages, and really our tax structure is a primary one. At the individual level, South Dakota imposes no personal income tax and no capital gains tax. And then this treatment also applies equally to individuals and to trusts. There's no personal property tax and no tax on intangibles assets, which is especially important for families holding significant financial assets, investment portfolios, or closely held business interests. From a wealth transfer and estate planning perspective, South Dakota is equally as favorable. The state has no gift tax, no estate tax, and no generation skipping transfer tax. So this really allows for long-term multi-generational planning to be implemented without the risk of that state level erosion of wealth at each transfer stage. And then as for businesses, South Dakota imposes no corporate income tax and no business inventory tax. So this creates a highly efficient environment for holding companies, operating entities, and trust-owned structures, especially when combined with South Dakota's modern trust laws. So then, in addition to the income and transfer tax advantages, South Dakota also stands out nationally in the area of insurance taxation. South Dakota has the lowest state insurance premium tax in the US for limited liability companies, and trust-owned insurance structures also can benefit from those exceptionally low rates. To kind of put this into perspective, South Dakota's insurance premium tax rate for trusts is only about 8 basis points or 0.08%, as compared to a US national average of about 200 basis points or about 2%. So a very big difference there compared to the national average. And then, with South Dakota offering so many tax advantages, you would think that they might struggle to balance their budget, but South Dakota typically runs a surplus with their budget. That really is through a focused and limited tax base. So the state's primary tax revenue comes from three sources: sales and use tax, real property tax, and then bank and financial corporation franchise tax. So looking at those, the burden is not placed on income, capital, or wealth transfers. South Dakota has also emerged as one of the most important financial asset centers in the US. Total banking assets in the state exceed 3.4 trillion US dollars, which places South Dakota among the top jurisdictions nationwide in terms of banking concentration. Again, to kind of put that in perspective, South Dakota's total banking assets exceed the combined banking assets of 9 other US states, including California, New York, Florida, and then several others. This reflects not only our favorable tax policy, but also a very stable regulatory environment that has really attracted the major financial institutions over the past few decades.
Thank you, Coley.